Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 14th, 2025, and we're diving into Citigroup's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Citigroup's performance, especially given the significant developments in their latest earnings report.
Revenue and profitability overview. Let's start with the top line. Citigroup reported revenues of $22.1 billion for Q3 2025, marking a 9% increase year over year. John, what are the key drivers behind this growth?
Citigroup's revenue growth was driven by strong performance across all its business segments, particularly in markets and banking. The company also benefited from increased net interest income, which rose by 12%, and a 4% increase in non-interest revenue.
And how did this translate into profitability?
Net income rose to $3.8 billion, a 16% increase from the previous year. The adjusted earnings per share came in at $2.24, significantly beating the analyst's forecast of $1.83. This reflects Citigroup's effective cost management and strategic investments in high-growth areas.
Operational efficiencies and future outlook. Despite the revenue growth, operating expenses also increased by 9% to $14.3 billion. How is Citigroup managing its operational efficiencies?
The increase in expenses was primarily due to higher compensation and benefits, as well as investments in technology and transformation initiatives. However, Citigroup has managed to offset these costs through productivity savings and cost-cutting measures.
What does the future hold for Citigroup, according to their leadership?
CEO Jane Fraser emphasized the company's strategic execution, which is driving stronger business performance and returns. She highlighted investments in new products, digital assets, and AI as key factors for future growth and innovation.
Segment performance highlights. Let's delve into the performance of Citigroup segments. How did the markets and banking segments perform this quarter?
The markets segment reported revenues of $5.6 billion, a 15% increase, driven by strong growth in both fixed income and equity markets. Banking revenues surged by 34% to $2.1 billion, with significant contributions from corporate lending and investment banking.
And what about the wealth segment?
Wealth revenues increased by 8% to $2.2 billion, supported by growth in Citigold and the private bank. The segment benefited from higher deposit spreads and investment fee revenues, despite challenges in the Wealth at Work division.
Shareholder returns and capital management. Citigroup has been active in returning value to shareholders. Can you elaborate on their capital management strategies?
Citigroup returned approximately $6.1 billion to shareholders through share repurchases and dividends this quarter. The book value per share increased by 6% to $108.41, reflecting strong capital management. Their CET1 capital ratio stands at a robust 13.2%, indicating a solid capital position.
How does this impact investor confidence?
These actions demonstrate Citigroup's commitment to delivering shareholder value and maintaining financial strength, which should bolster investor confidence in the company's long-term prospects.
Key takeaways. In summary, Citigroup has delivered a strong performance in Q3 2025 with significant revenue growth and profitability. The company has effectively managed its expenses and continues to invest in strategic areas for future growth. John, any final thoughts on Citigroup's investment prospects?
Citigroup's robust financial performance, strategic investments, and shareholder returns make it an attractive option for investors looking for stability and growth in the financial sector.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Citigroup's performance in the comments below.